Hi everyone, this is Samir here. I think what we'll do in today's session this session is largely about future gazing. And normally what we do in our sessions is we present our view on a particular subject. And then we basically take questions on a chat box at a later stage. I think we'll go slightly different today. Our intent is to it's about future. Many of you may have your own views. You can share them on the chat as well. It's more interactive today because I think it's not really that I know everything and we know everything as a company. The Digital Fifth knows everything. It's not like that. And it's also not really about a regulatory framework and how it is working and what is changing. That we are not even going to talk about it. It's a very overall view, and that's where we sort of want to go in. So what I will do, you keep sharing your questions back to us. I'll try to respond back along the journey. So normally we go and take a break after every 30 minutes. Um, Not really. We are not going to take that after 30 minutes. We actually will you keep sending and we will keep taking breaks as the need be, because this subject is different. It's actually about future gazing. Now, before we get into it, I'll give you my perspective on what the market is going at least. I think from a regulatory perspective, the arbitrage is gone. Okay. Uh, Even today, when we advise with a lot of customers as of now, I think our perspective has always been that look at more closely, look at from the framework perspective, what is feasible, what is not feasible, what is going to work, what is not going to work, then make an attempt, right? That rather than just generically going after a particular segment, right? Segments are going to be very tough, very, very tough. I think earlier we had this framework that you could actually build a fintech without looking at much about regulatory frameworks, and we look at it later stage. I think RBI has come up very, very aggressively, right? Very, very aggressively. You can't really do that. You just don't have a sort of possibility of getting there. Now, at least, so let's go item by item and thought process. So regulatory wise, very tough. They've already closed the segment, which is the segment focused on prepaid, right? Prepaid segment with credit was a big segment. We had almost a crore customers in the country running on those rails, and that has been stalled. And the result has been that all those 1 crore cards are either non-functional or hardly functional, right? Banks are also not able to support them. There was a discussion that regulated entities, which is the PPS can't do and banks can do. I think what is appearing to be the case is nobody can do. That segment is over. RBI also came back with a credit card with some framework that is useful. So credit card is another segment which is going to grow. But again, that framework has a lot of controls and processes. And to add it more difficult, make it more difficult, RBI came back with the regulatory guidelines only a few days back, where they've said that the regulation is applicable now. And you have to ensure that all your lending, which is you are doing right now to your current customers or new customers, follows it and has a repercussions on embedded finance, repercussions on all your own apps, and that is going to increase. So as we work with a lot of our clients, we are realizing that it is painful, it is complicated, but needs to be done because it needs to be done. So I think regulatory arbitrage gone, and therefore you will see all the founders, all the investors also spending more money on only regulated. So till now, the investors were looking at largely a non-regulated area and then fund for it. I think that change will happen. It is surprising that P2P lending never got the money, whereas it is regulated. So that did not get money, but you have money in all the other places. Why I will not name those areas, at least in this call, is that sometimes our messages go directly to regulators, and then we end up situation that it got called off, and therefore let's regulate that area as well. So I don't want to be a negative guy here, but yeah, I think there are all those holes which existed are gone. I also had a call today with the founder who was having a challenge that now he doesn't have a license for payment aggregate. And since he doesn't have a payment aggregate license, his business stopped, and he was doing a fairly large amount of transactions till now. So it's a very, very sort of awkward, difficult, complicated journey as things stand today. My suggestion is that if you are starting on your journey now, be more careful. And if you are running your own NBFC or a bank or a fintech and you're doing digital business, please do with all expectation that regulations are there and they will catch up with you. Earlier, you could get away with saying that this was not so, you can't do anymore. The only catch here is that if you're not doing a pure fintech job, which is this regulation is only applicable to pure digital onboarding journeys and digital business. If you're not doing full digital, it is not applicable. So those guys who are working villages and those who are doing that inclusion work, it is not applicable to them. Even if they are slightly digital as well, because they are trying to optimize journeys for sure. So I think the regulatory side very clearly that opportunity exists. There's also a thought process which I had was that in India we had 1 lakh crores of funding which has happened in 3 years, and I'm counting it just last 3 years, right? 1 lakh crore has been invested in India. Now, how much of that money is already available for investment, right? So just look at the scenario. You saw a lot of startups thinking of going outside the country. So you see the maturity level. Many of these founders are very mature now and doing second or third entrepreneurship, and they will go outside the country. So entrepreneurship has a culture has moved up. We've seen a lot of non-fintech founders coming in building it. So I think we don't need to look at maturity of only fintech founders. Generally, fintech founder maturity as well as the maturity of the employees increase. For example, I was checking with a very young girl. I had a chat 2017. She was managing lending product for a fintech. And I think she was in a minor role in those days, a product manager, and she got funded some $4 million only a couple of days back. She was building new, so I think new business. So what I'm trying to communicate is that ecosystem to that extent is growing a lot. Investors are putting money where it is, and the employees know how to work with startups, and they also hop startup to startup. But what is the message? 1 lakh crore has not been spent. I think what a large chunk of it, I'm not able to quantify how much, but my understanding on the market size right now is that at least maybe good solid 60-70% money is already available on the market, maybe more than that, which means that 60,000 crores or 70,000 crores is unspent, and that will find ways into finding new segments in embedded finance. They will find new segment. They will find a segment on B2B. They might just open up, maybe the wealth business has not done too well, but in wealth tech, new segments are coming up. In wealth tech, at least the focus on brokerage is very high. Just look at the dichotomy, right? On RBI is, or as a regulator, does not want lending to be done by third party, whereas that if you look at SEBI, the entire transactions run on brokerages. So it's completely because the way that business came up was the brokers-led business, right? Whereas this side is manufacturer-led business. So it's a very different world happening. Both segments are going to compete, but I think B2B will grow, wealth tech will grow, insurtech will grow. Digital lending largely will grow with the current occupants. We will not see a lot of new occupants coming in. But B2B side, a lot of entities will come up. There will be guys who will build better AI/ML for collections or whatever it is. So segment will grow. Growth I definitely see today happening. So I think the funding and money is taken care of that segment. The third part, from my perspective, is bankers and NBFCs also now get used to partnership and digital business and revenues. They know this very well. They know where the money is. They know how to operationalize it. So I think if I were to say 2019-20, I think before COVID, we've not had banks looking at this segment much. It was more of a, अरे देख लेंगे उसको क्या कर लेगा देखते हैं जब वो बड़ा हो जाएगा तब देखेंगे, right? I think we know that digital lending has become very large and all of that. So many of these banks have created their own digital lending journeys, and they're doing okay there, right? I think as a large bank here, many of the large banks have come back and told us that they're getting benefits to the extent of 30 to 40 or 45% on their digital lending journeys, onboarding journeys. And also from a cost perspective, the cost of operations are as low as anywhere between 30 to 80% low in most of the use cases, right? Many of you may come back, that looks bizarrely high. Fact is, this is how I think sometimes 80% looks reduction is also looks incorrect. Actually, it can be more reduction as well. But it's use case to use case. I'm not here to claim that I know all the process well. but whatever I know about the market, that's what it looks like. So I think from a market perspective, banks are going to get more digital because they are legally permitted now, and they have also tasted success with the partners. They also learned that art. Many banks are as savvy as any fintech is, which is good for the customer. And also hyper competitive as well. They're building journeys as good as or better than even fintechs, with a lot of resources at their disposal. And top management also building digital strategy as part of the framework, right? So I think that's a very, very high level view. I can keep going on and on. One question actually I wanted to maybe some of you can actually put it on chat. My question is that when the customer acquisition costs are lesser, when the cost of operations are lesser, and the number of jobs. So what will happen to the jobs? What kind of jobs? So can you just give a quick comment back? What will happen to the jobs in the market generically? I want to talk about it. So you can talk about this. What will happen to jobs in the market as this much of digitalization happens? And the second question I had was, let's say if that much of digitization does happen in the market, uh, uh, there's so much of profit pool getting created, right? So potentially this might just increase the profits by at least a couple of percent here and there. It's going to be large, right? I mean, many times the cost of operations runs into 2 to 3% of the overall disbursement, right, or overall balance sheet. What will happen if it comes down dramatically? Do you think that banks will share the profits back to the customer? They will retain some portion of banks, and I would say banks basically the providers will keep the money with themselves, or they will share with the customer, or everything will go to the customer. How will it happen on the balancing act? It'll be I'll be very, very happy to see the feedback. I've just seen one or two. I think I just saw feedback that jobs will remain, but productivity goes up. Actually, it's actually a good point. I think good to have you on board, Shashi. So my take is simple. There are some jobs which are going to get created, are going to do superbly well. I think we've seen product and AML, and then some of the digital business side, it will grow and grow and grow. But I also know that some of the jobs which are in the branches on the sales side or branch operation side, and it's not that I'm talking from sitting in my tower and I don't step outside. Whenever we visit along with our customer to villages, to branches, to wherever we go, I think the branch footfalls are reducing. At least I don't see it as much, right? So the jobs will cut down. I know that very interesting stuff I heard was that a bank has moved its call center calls to the branches because branches had easy time, right? Phenomenal idea, innovation. I think brilliant innovation where the bank saying that during the day, the calls are routed to the branches so that when they have time, they can route and reduce the operations cost, right? So I think jobs will get created, but these will be slightly higher paying jobs or very menial jobs. I think the medium-sized jobs where you have a bit of a complexity and then you are locally based and you grow up as a regional head and all, might just not exist as much, right? So I see a reduction in numbers, and it's to my mind it's scary. I'm not denying to say that I'm here to scare you, but I just wanted to tell what I feel like. And of course, one of the question which I keep saying is that the salaries are becoming bizarrely high. My input to all of you, and this is my sense of understanding. Look, salaries went up in fintech area and even digital businesses because the funding was chasing all of you guys, right, including me. But I do believe that it's time to check in some of the thought process. I don't think the salary will double up in next 3 years. I'm not a doomsday guy, but I'm looking at basic profitability structure, right? The amount of money you pay for a single guy to come in at, let's say, 40, 50 lakhs or 80 lakhs, I think it's going to kill the business over a period of time. So I think what happened post-COVID and the salaries went up will also come down. So I think there's a sense of, and I'm not going to get benefited out of it. Don't think that I'm saying this because I'll get benefited. I'm not benefited by that. And I'm definitely benefited when the salaries increase, right? And generally, as a consultant, also we can charge more. But that's my understanding on how we are progressing on it, right? So that's largely a thought process from me. I think point valid. I think Sunita was saying that personal touch will remain, and then there'll be impact on I think mundane copyable jobs will go up. I think that's largely what I wanted to at least open up this session with. I think what I will do is I'll talk you through some of these pointers, and we'll stop in between to take your feedback. And again, ideas to learn from you, take your feedback, take your guidance, and while doing it, give our perspective. I think Sushant has just shared that product profit distribution will be across all systems. Some will get passed on to customers' benefits. Some profits will be naturally retained. I think this is what should ideally happen. But a worrying point with any digital intervention is that finally in any digital business, only top 5 to 8 players will win the game, right? I think it's going to be a massive oligopoly. Even in sadly, even in lending, I guess after 3 to 5 years, it'll be oligopoly. So if only 5 or 10 guys will control the market, I think we'll have a challenge where it will not get redistributed. And my personal view is that this is going to happen. So you would see another level of intervention by the regulator at different point of time. They will kick in and they will ask about redistribution. Right now, this is all getting pulled into the profits, and the profits are zooming off some of the large players as well, right? So again, I'm not against any one of them. I'm just saying what I feel will happen, right? So with this, I quickly show some slides and all. Many of you have been with part of our journey as well, and know us. A quick view from who we are and what we do. And this session is largely on the growth story. Growth story is not going to ebb. It is going to change, bit of a direction change, right? So I think we have been there for almost 5.5 years in this business, and doesn't feel like, right? It's 5.5 years. We started on 17th March 2017. It's been now 5.5 years. And we have been largely focused on consulting, training, and hiring. That's what largely we do. And we work with everybody in the ecosystem. There are customers on the unicorn side, customer on the banking side, customer on the network side. Everybody in the market we have worked on. Even if those we have not worked on, we are friends with each one of them. So I think I'm happy that market has been very, very helpful to us. We have very decent ecosystem reach through our LinkedIn and also. If some of you are not on our newsletters or a YouTube link and all, maybe Matthew, you can send them a link to subscribe on newsletter or maybe at least the YouTube, please, where a lot of this content is actually posted for anybody and everybody to consume. And of course, customers are worldwide. This is largely what I think our business has changed a lot. We are now working, and this is a very honest view. Why I'm saying all of that is that we work with slightly larger entities now, where because early stage entities are slightly reducing in size as well. This is a fact right now. I'm not happy about it. So in fact, we were thinking that maybe we need to work with early stage with either a grant structure where we will give them some grant or we'll take them some equity. We don't take equity right now, so therefore we are not able to work with them. But we'll see what we can do about that. But yeah, we are moving towards slightly larger entities and not really early stage fintechs. We do a lot of benchmarking services in the market. So in fact, I think we will come back with the benchmarking, some reports and structuring what we should do. Strategy related, a lot of content which is already in the market. You can look at our last year report and see what you can pick up from there. A lot of strategy inputs are there. Open banking is a big strategy area for us. We work with a lot of guys in the market, and I think most of the guys in the fintech segment early on who have started were all from our classes. Not all. I think some of them, let me say, most is too much. And of course, we work with startups. We work on the security compliance. The new regulation on RBI side, which has come. We are working with few guys for compliance of that with their entities as well. They're all on fintech side. They're also on labeler side and also on the NBFC and bank side. So we're working across. We have a fairly decent hope, and we keep sharing reports. So I think we had a traveler service report recently which came out. Maybe you can share that. Matthew, Ashka, you can share the link to them. You can have a look at that. And a new one which is coming up on credit card very, very soon. And another one on open banking is coming soon. So we do a lot of research reports, and we are right now sort of gunning for it. We do a fair amount of training as well. We'll talk about the training which is going to come up very soon. And we do a lot of hiring as well. So if you want to get hired, you can reach out and give it a link. We will help you in getting placed as well. We are right now working with many large players on their hiring cycle. And we hire for largely leadership and digital business only. Now let's come back to the topic itself. as I was saying, that 12 billion of funding has happened in the market in last 2.5, 3 years. That's 1 lakh crores, right? 1 lakh crores to be spent. And just to give you from a contextual perspective, maybe there are 100 crore adults in the market, right? In India, 1,000 crores has been spent per adult in India in the fintech segment. What will it do, right? It is reach. I'm talking about from a country level of that size. It is huge, right? And it is trickling down in different areas. You see many of them acquiring. So let's say if you see M2P acquiring fairly extensively in the market, we see Razorpay getting aggressive outside India, Pine Labs getting aggressive in hiring acquisition as well as going outside India. So I think you see the money showing different realms. And also on another part is that all along, and may not be capturing here, fintech was supposed to be a loss-making business. We were looking at the report of Grow, right, few days back, and Grow is not making losses. Grow is making profits, right? Because at digital at scale is profitable. Zerodha makes profits as well. So I think profit pools are also started appearing in this segment. It's no longer about. So right now, whenever we're working with our clients, one of the report I have to go back to the client and show is that how quickly can they come back on the P&L positive side. And so the profit focus is not bad. It is viable now to come back to profit as well. I think this is just a view on funding. So for all those who said funding is not happening, it's not necessarily true, right? I think there are segments which are getting funded as well. So you look at in good solid 9 months, almost 9 months or 8 months, we've got almost $3.2 billion. That money is more than what we got in the previous year any year. So last year was aberration, which was the pent-up demand and digital impact was the weightage was too high. But technically, I see that is a good number to have. I think by the time we close this year, we'll be close to a $5 billion, which is again huge number. So 1 lakh crores is right now in the market, and a lot of these entities, for example, early salary or a one card, have their model validated. Many of them are not under any tremendous regulatory issue as well, because many of them already have their NBFC license and they have the framework and processes and to manage all of that, right? So I think the market is, and look at the people like a Perfios, right? Perfios has grown, then they have acquired Karza as well. So I think you see that segment growing in a different way. UB, which is a B2B co-lending related framework, or I would say co-lending, but maybe a B2B framework where they're enabling multiple kinds of lending, including supply chain, has done well. And it used to be called Credivenue earlier. In terms of segments, what is getting funded, I think if you look at it, we are trying to compare 2021 to 2022 till September kind of data, right? So we are technically trying to go somewhere here. And here, if you see on the lending side, we see decent number of startups getting funded. 48 startups got funded in this period, whereas last year was 71, which is, we are only say 2/3 of our time gone, which is just 8 months gone. So it looks positive right now. Most of the guys in the payment side also getting funded for lending. So that way it is okay. Open banking is still okay, nothing wrong in comparison. We see WealthTech growing, and I think this is the big movement we see. WealthTechs are growing, and we are seeing lot new startups coming in this segment. We also believe that in next 2 years, InsurTech will pick up, because we believe that lending the money will go only to the large players, will not go to the smaller players, and therefore the funding direction may change a bit. So the more money will get allocated here, and lot of money will also get allocated to B2B players rather than just B2C players. I think earlier the focus was on last year. Or Matthew, can you just manage, please? Yeah. Okay. In terms of amount of funding happening, I think already the lending rated funding has already crossed 1.6 billion. So money which has come here is humongous. I think open banking, when not too much of money has come in. You have to also look at the cyclically. Last year was massive for neobanking. They still need to spend that money in the market, right? So there's still time. And look at WealthTech, right? WealthTech has done well in last 2 years. It was not the case earlier. We were not getting any startups here. So I think this is good. InsurTech has been a bit of a challenge, but it will improve. And enabler section, we were not capturing earlier separately, which are like a Perfios kind of entities. We are not capturing like earlier. So I think it's showing differently. But any which way, I think the storyline is that the funding is not going away. And what we have already in the market is a humongous amount of capital. Will come as a acquisition side, or it'll come as investment to some of the startups. But it's on. In terms of the number of startups funded, I think we see the number of startup funding on the pre-series A side is also not bad. I think we don't see any bad trend on a generic basis. What we see as a bit of an issue is that while the funding on the early stage is okay, we have an issue primarily in C and D where excess amount of funding is not happening. Now you should look at from a two perspectives, right? It's not happening because maybe those companies should not be burning that much of capital. I mean, the amount of capital which is getting burned randomly, and we have seen all of that. I don't want to announce and talk about any specific case, but there's a bit of a unnecessary burn, and people are throwing BMWs on the table and then random ads all over. I think there's a lot of unnecessary burn which may have happened last year. The capital is already available to them. Maybe that money can be spent on acquiring customers sensibly, and also acquiring competitors in the segment and scaling up and getting license and scaling up from there. So I think this, while it may look like an aberration that they are not getting more funding, but maybe we don't need. Last year was such a big number that I think that money has to be spent. And of course, there are guys who have not moved from, who must be waiting from C to D and all. They must be a start. But I think it's good to be. I think we say no, gym mein jana chahiye, exercise karni chahiye. I think it's not a bad idea to sort of wait for some time. It will come back. I'm not. I do see money coming back as well for Series C and D. We saw early salary raising money or a one card raising money. It's a Series C kind of money as well. So I think what do we see, right? What we see is that Wealthtech and InsurTech will scale up a lot. You should see the funding. They were a bare minimum of the ecosystem. They will be typically together less than 5%. Last year and this year they have become 10%. I think this number will jump to maybe 20% or so as we scale up. So I think these two segments are going to show a lot of positivity. Another segment we see positive movement is credit card, because at least regulator has blessed it in the structure, right? Regulator has definitely blessed it, saying that credit card and co-branding credit cards are permitted. And after doing that, they immediately came back and hit prepaid, right? So credit cards will scale in the market. Today we have 8 crore credit cards, and I think growing at a 20% plus or 25% plus rate. I think given that prepaid has gone off, credit card segment might just grow in this year or maybe next 3 years. The growth might just be at least 30% plus, and that's what we believe will happen. So you may have sudden movement on the credit card side because there's no other choice. That's the only credit line available in the market. And B2B business models, B2B fintechs or startups who are enabling the segments will also do well. So I think that's what we see. And of course, M&As will increase and continue to increase over the periods, because opportunities for those who are not getting funded would want to have no other choice but to get acquired. Those who have money and can acquire them will go ahead and acquire. So I think this is the right time for M&A activities. And you should see traction here, right? So at this point of time, I'll quickly pause, see some questions there. And if there is anything which I can respond back, I'll try to respond back. I know today I'm running a bit more focused on discussions and thought process, and not a very structured and 20 minutes sharp stop, because this is a topic where we are doing future gazing, right? We'll be happy to take questions, right? There'll be impact on. Okay, so Person Ravind, profit. Okay, so I think Sunita was saying about newsletter. Please go ahead and take it. The newsletter, if you want. We have almost 20,000 people on newsletters on email, and also on LinkedIn. We are available. You can pick up there as well. So maybe somebody can actually share a LinkedIn as well if you are interested in that newsletter. That's up to you. And traveler service, I think you just noted. I think Shobana is asking a question, but isn't cash burning happening across the segment, either via marketing or through exorbitant salary or through fancy cars? I think it is not as high as it happened in the brief period earlier. And also we have to realize that I think it's a greed issue, right? And this is my answer to some of you saying that exorbitant salary. So whenever we talk about a banking guy trying to move into a fintech segment at any salary level, or an NBFC guy, he will typically put a premium of 50% to enter, right? So if somebody has to pay, he has to pay that top dollars, right? So if suppose somebody is as a let's say SVP level and he's making 75 lakhs, he'll not enter the banking segment, fintech segment below a salary of let's say 1.2 crores, and also asking for a lot of other things. So I think there's no choice. It's how the ecosystem based. But this year the expectations have come back in more natural. Also, those who have to grow fast. I mean, look, we are as an organization. While we speak about so many fintechs, we ourselves never raised funds. On the reverse, we have provided support, but of course, we are even thinking of providing some grant to people, right? But we could have grown 10 times more, right? But we would have taken capital, right? So there's different models, different thought process. We don't spend much money on a lot of other things as well. So it depends on how the founder looks at cash burning is neat. I mean, let's say let me put it like this: we would have looked different if we would have spent, let's say, maybe $5 million, and by now our revenue numbers will be, let's say, $5 million per year. I think it's a different choices to make, right? It's a different thought process. But yeah, I think you have to burn money to make an impact. That's how the market runs. If credit card players of a new type or a buy now player of new type don't put all of that charm in, they don't get in. Also, when they partner with banks typically tend to give them a very high FLDG, first loss default guarantee, very high. I think thankfully with the RBI coming in, it's actually down to more 10%. Earlier it was 100%, right? Many of them will say, I will not even touch. You do a 5 crore disbursement, and then we'll see. So I think to that extent, there was a cost in everything. That is slightly coming down as well. So I think what choices do you have, right? We have to play where you are. Any views on cross-border payment fintechs? I think this is an area of very, very high focus for us as well. We are working on some assignment with a large bank on digitizing their remittance, both inputs and outputs. I think this segment needs different improvement. As a user of these services, I'm telling you that I find it bizarrely complicated and very, very poorly done, extremely poorly done. There may be guys who will come back and think that, okay, the new Swift process will take care of all of that. No, it does not. Okay, no, it does not. It does not come to clients at all, right? So I think there's a huge amount of issue on this side. And as I said, markets will go differently. Some of fintechs will actually enter cross-border and improve it. There are guys like Neom and a few more guys in the market doing it. I think we will see more and more players coming. Kshitij is asking a question. Kshitij, do you think any fintech which doesn't have an NBFC will keep on doing business as usual? Yes and no. I think over a period of time, anybody, so period of pure digital NBFC or a non-licensed digital player will get over rather soon. So almost everybody will get into almost everybody will get into this segment where they will take licenses. There are no choices. Regulatory arbitrage is so low that you would rather not play. And given that in co-lending, you actually can manage the customer experience and all, whereas an FLDG of 10%, assume it is available, you cannot have access to data. I think there are two divergent views, right? So people will move towards a co-lending framework for sure. It looks like to be. So they will have to take a NBFC license. That's my take, Kshitij. I think the question from Raman Shukla is how account aggregators will help fintechs for banking and wealth management. I think my sense, after 6 years of boring everyone that क्या बोलते हैं मेरा एक स्टोरी थी ना कि वो शेयर आया I think thankfully finally share has come, right? We now see it coming, and 6 years it took, right? It's been very irritating from the day I started my journey as an entrepreneur, as a fintech founder. I found it very difficult to explain that 6 mahine kabhi aayenge, right? But it has now finally come. So my personal sense, account aggregator will dramatically increase. the usage is already happening. I've seen use cases also getting adopted by many players. I do believe that we are also working with few guys to build new use cases in the market. So account aggregator will dramatically improve the fintech access to the market. Now, as I always believe that in any digital business, top few guys will manage or control the business. So we're heading towards a oligopoly kind of world where this kind of easy availability of data will centralize much of the data points. While yeah, I think that's what my take is. I think Ritesh, I agree on the LRS side. When you said you are optimistic for B2B fintechs, which segments were you referring to and why? I think I'm referring to anybody in the credit card business, anybody is optimizing onboarding journeys, anybody is trying to build maybe KYC, AML, anybody. So, and you have to also look at not from a US perspective, right? So what has happened is that India has always sort of initial stage was looking at entire thing from a US perspective. It has happened in US and we'll do it here. I think we just need to now realize that we are done with it, right? Whatever we could copy, we're done. Everything which is happening in the last 2-3 years has been new. Similarly, on the tech side, in India, we have so many employees working in the banking world to optimize, digitize, process. Now, many of them can be optimized rather quickly. So somebody now has to go deep into trade finance and treasury and solve for it. Remittance is just one component of it, right? There's been zero work done on LCs and BGs. I also believe that this is my firm view, and my view is that time for blockchain has come now, and now is now, right? We are also getting more aggressive in the market with the segment because I think whatever it had to prove in the market has already happened, right? Now it's time now to get it used in a very very large way. So we ourselves are taking a very very aggressive bet on it. And going after that technology because there is a usage we can see. And yeah, that's what my sense is. That I don't know if I answered your question yes or no, but yeah, and B2B segment across board. In fact, I was talking to a player who did not get a license on B2B payment aggregator, and I told him that with whatever payment gateway and tools and all frameworks you have, you can reach out to banks, start working with them and take the same technology outside the world as well. There are very few guys who know that much of it. So you can actually create a product and product tech-led business. Embedded finance business can still be done. There are a lot of, I mean, I for sure think that there is a need for potentially a new age core banking platform which can host a whole digital bank. Why you need a disparate system, an old world system, a new world system, all coming together? Can you build a ground up? So I think there are space like crazy. At the end, and this is an infinite end to it, where after maybe 20 years, 30 years, optimal banks will have very close to 1% of the current employees, and the cost base will be maybe similar to what we have on pure on tech side. May not increase, but it will get optimized. And for that world to happen, there's enough people to work out there and improve the customer experiences. Can somebody improve the call center experience? Can somebody improve the voice experience? For example, recently Visa, not Visa, why I'm saying so, NPCL launched that 123 Pay. We are working with them on that side where they're on UPI on voice, right? Voice payment has not happened much in India. That will grow. So I think somebody has to look at the ecosystem and saying, can we avoid getting B2C and head into B2B and build a 50 million, 100 million, 30 million company and kind of stuff rather than becoming a unicorn rather quickly, right? That's my perspective on it. So enough spaces on each side. Yeah. Okay. So with this, we we'll continue on this today. I'm not in a hard stop. You guys can continue with me for some time. This is a very, very thought-provoking area, so I wanted to spend more time on it. So if you have some time, you can continue after 6 as well. Anushka, can you, or Maitri, can you send the feedback form? And also send them some details of the next training which we are doing. I think sometimes people get lost what is happening. In fact, I just said that we are taking a very aggressive bet on blockchain. I think I'll give you a bit of a view I have is that we are trying to ensure that this vertical comes up. There are a lot of guys working and talking only about use case. I think we need more implementation power. So if some of you would like to talk to us and discuss on it, we would be very happy to do that as well. So we are very, very aggressive on our bet in this market in segment. With this, I'll continue with this the ecosystem, and then we'll talk further as we take a break. So if you look at the ecosystem has become more and more richer, and you see more and more entities coming. Let's say, for example, on payment side, we saw new companies coming up. Investment in PFM, right? A lot of new companies came. So this is a period where everything slowed down because people did not know where to run, and I know many companies would have closed down as well. In InsurTech, new companies, new segments are coming. So they're not copies of each other, right? If you look at earlier, you will see each one of them is copying. And how can you distribute direct mutual funds cheaper and faster, right? And that's what the whole focus was. It's different now. It's completely different now. And people are producing what let's say Kenko is doing is different from Onsurity. Onsurity does insurance for us, and fab job at it, right? Multiple. One of the company which we got funded is about save now and pay later and buy later, right? That's a new product. So I think there's a lot of work which we can see. What I also see is that lending marketplace, consumer lending, MSME lending, P2P lending, and inclusion, and all of that look very, very similar. Lending is the only segment where you can make a disproportionate amount of money and disproportionate amount of loss. But I also see that the kind of differentiation we had on most of these guys are, if you say on the retail side, were earlier without a banking license or NBFC license. I think if I look at it, a good solid 50-60% already have license, which are large, and the rest are in the process of acquiring. MSME lending, largely all big guys have their own license. You will see a rise of pure digital NBFC coming up, like a Vivriti or like a Indify coming up more and more, rather than the intermediator. And of course, there is a possibility of embedded finance player also coming up, which is a new segment which exists today. P2P lending, I personally feel sad, but I think I thought that some of these fintechs will grow. I think only two of them are growing. I think Lending Club and Liquid Loans are the only two guys, or maybe one or two more are growing. Rest all are not growing. So it's a difficult business to win, but Neobanking has done well, right? So there's a growth out there. Pretty positive growth out there on the Neobanking side, both on the retail and MSME. Retail obviously is far more visible in the market because they did Ed. Embedded finance, I think even Zoho and others are also kicking in, and people like Nero or Bharatex also building stacks like that. So I know this is a bit of a mix-up, but let's say, for example, Nero and Bharatex are enabling it, whereas Zoho and Quick are actually onboarding their customers on these journeys. Very different way. RegTechs are doing okay. I don't think a lot of new RegTechs are coming, but I do believe there is a lot of more space. And of course, enabler side, now we see Hyperface, which is credit card, Upswing, which is a neobank building platform, Decentro, again API banking. A lot of new players are coming in this segment, and which is very positive. I think I'll not take too much of time here. I think the world moves slowly in those days, right? I now think of those days where I was actually on the banking side. They were ginti ke fintechs, right? All we need to know was that top maybe just 30 or 40 guys who mattered, right? Today is the case where, despite me saying that I know most of the fintechs, actually it's not structurally true. A lot of new fintechs are keep coming in the market, and it's keep growing, right? Keep growing. I think if you look at the current segment, and we spoke about it, the markets will grow differently. And maybe I'll talk about each area by area, right? I think payment fintechs have anyway pivoted to a neobanking and the lending and all of that. Interestingly, pure payment segment also is profitable. If you look at BillDesk, it's also profitable, right? So it is possible at scale, and you don't compromise on too many things and all of that, right? So if you're very focused, you will do it. Networks have a huge space. So I think many of the guys will actually work with networks to build new tokenized products as well. I think CBDC is very close to reality. I think we need to be cognizant about that. And that may have a dramatic impact on how the payments happen. And then maybe even if they have impact on other pieces as well, right? So my request is be cognizant about the market and all of that. Personal view, all the payment players, some of the, let me not say all, most of the payment players will actually move towards lending. Now, given the kind of tightness we see, everybody will actually get into licensed framework. Today we had a call with a large lender, and it was very worried on the implications. So I think we'll learn together, we'll build it together, but there's a space there. But the days of breaking rules is over completely. On the wealth side, I think a lot new players like Vint Wealth or Grip are coming up. It's new, and they are thinking completely afresh, right? It's not a cut copy paste. It's no longer about distribution and all simple stuff. They're getting into bonds, getting into aggregation of new kind of transactions, so which is very powerful, right? I think I love this space where everything which we are getting across is fresh, and it's not copy from somebody else. I think digital banking, which is the banks or NBFC, is getting digital. I think my sense is that I think RBI has already come back and saying, can we ensure that the bank set up digital banking units, right? DBU, and you can see old programs from us or old webinars from us on DBU, right? But what I see is that maybe next couple of months or 4 months now down the line, RBI may come back with a very stiff expectation that this is what they expect on the regulation side. So they've already told that digital will be the main business, and you'll have to focus on digital for retail and MSME. And that's very strong statement they have said. Not most banks have not moved ahead in that direction because they are expecting that stiff guidelines to come, but it's round the corner. That's my understanding. So basically every bank will have to go digital now. For doing that, they'll acquire some of digital lending, or they will acquire some of these digital business guys or digital lending guys. I don't know, neobanking guys. The other side is the neo, and generally between a fintech, or which is neobank, or a digital channels of a bank, this pool of new customer onboarding, I think there's already very significant businesses happening on digital side. I suspect and I believe that this number will be higher than the branch channel in next 2 to 3 years, right? I'm not statistically accurate, but 2 to 3 years, I believe that the digital channel will become larger than the branch channel for acquiring both retail customers from a savings account as well as lending. And that is a point of time where everything will change, and everything else in the sun will get questioned, and the benefits will start coming up. And of course, neobanks have done a fairly good job, right? So we have seen segment-oriented neobanks coming up, and there's also increase in neobanking as a service, right? There are a lot of players doing it. Now, question is that is it regulated, non-regulated? I think it's the closest to the regulated structure, because when CBDC, when RBI came back with a DBU regulation, they said outsourcing is possible for the entire virtual segment, right? So it is possibly there, but it's a risky one. I do hope and I do believe that in a year or so, RBI may come back with a regulation to simplify it. At least, thankfully, all those neobanks are very regulatory compliant. They know when banks think of lending, they don't think of security as much, because this product was always given through DSAs, whereas the savings was already done directly, right? So there is a far more focus on the KYC and all process when it is done directly, and there's no incentive you can make here and there, right? So you can only do limited stuff. So there's very well regulated. So neobanks, I think, will scale up a lot. I also believe that many of the neobanks may actually get licensed because of their good performance. And that way they will come head on with the banks with whom they partnered. And to the extent banks who are partnering with fintechs should also have a long-term bet on their own journeys and keep partnering with newer players. Okay. I think Dheeraj is asking a question that will CBDC compete with UPI or viewed as an alternate to QR payment? Look, as of now, I really can't communicate how and where. But from a framework perspective, underlying is similar by nature. So maybe it will come under, may actually run under UPI as well. Who knows, right? It's basically money moving. So you may have the same mode on the customer side. Underlying may be different. So I'm honestly not qualified enough to give a response. I'm not privy to too much of information. But whatever I know in the market, it is going to make an impact. And of course, UPI on credit card is possible. UPI on CBDC may also be viable. Somebody has to transact on that platform, right? So it's going to happen. I think Kshitij just sent a question on any further insight on UPI on credit cards. I think what I know about in the market, the work is right now happening on UPI on credit card. It's moving at a on RuPay side, it's definitely happening. And I do believe that over a period of time, this will scale up, right? So I think that's my take. Right now, it will come only on RuPay, but others will actually pick up as MDR issues solved. I think it's a no-brainer. It's a no-brainer because you look at the utilization, right? Debit card usage is already not growing because UPI is coming in. But credit card is growing because there's no choice, right? I feel so 1930ish when I take a card out and show it to the person, right? It's a very bad experience. All my checkouts are always stuck somewhere. So I think to that extent, I do believe that credit card, and in fact, UPI on credit card will be very powerful because it will start using the limits as well, which are set. So debits will happen far more easily rather than going through too much of authentication. So I personally believe that that's the way to go. But I think every good thing takes time. I think I remember giving this push almost 5 years back or somewhere in a very close group, and I got very heavily rebuked. Possibly nahi hai, kar hi nahi sakte, and now the market is opening up, right? So I think it does take time, but I'm very positive. In fact, I mean, right now, and while I speak about it, we are going through. I think this week, next week we are going to take a session on credit card, and this is the topic which we'll have as part of the session. So this deck is very long actually. I'll just show you the deck. So maybe if you give the feedback, we'll share the deck as well. But the deck went something like this, right? I'll rather move quickly. It spoke about the various trends. So I think, as I said, that all the banks will also take a very aggressive stance on PNL with fintechs and all, right. So they will actually build their own digital business. Blockchain ecosystem, as I said, has matured, right? And I think we do believe that blockchain will become core to a BFSI ecosystem. It's not far. It's just that we need to do one or two use cases, and I'm going to put all of effort which I can put and my team can put to behind that. Also on the customer ecosystem is matured a lot. So you will see more and more of embedded finance player because there is enough data, enough pointers out there, account aggregator and all of that. So this is a detail on more on the regulatory side, where we are saying that regulatory arbitrage is gone, as I spoke about, both in payments and lending. And digital banking is going to grow, and credit on prepaid is no longer permitted. So credit cards technically will grow pace. I think this is more of a guidelines which we picked up and we have analyzed. I'm sure some of the sessions you would have sort of picked up as well, how KYC has grown and what is possible here. On the master guidelines, we have picked up some of the elements as well. So you can give a commentary on that, and we'll talk about it, right? And of course the benefits, all of them are documented here. So what we are doing is, this is any which way this decks typically we do with our participants in detail, which is what we do as part of our executive program in fintech and open banking. In fact, we made some changes because in last few months we've got getting feedback that so typically these sessions which we do is, and you can get, I mean, the brochure and all, I think I'm sure somebody will share online. But the way we do is that we get industry speakers to come and work with us as mentors for the participants. Now, this change which we are doing is that earlier we used to do a full day course every weekend, right? So we will do a 14 or 16 weeks course, and then during COVID we started with 16 weeks. We reduced to more like a 12 weeks because the participant may not have time. But the feedback which we are getting is that the participant need shorter sessions on a Sunday. So what we are doing is that this time we are starting with a 6 months program starting in December. But session will be just, I would say, 4 hours, 3 p.m. to 7 p.m. on every Sunday. That will give you enough breather for you to do your other work as well. And of course, in India, you're never away from holidays, right? So you will have a Dashera, Diwali, something will always be there. So technically, in a 20 weeks or 25 weeks around that time, you should be able to finish your course. But the way we've done is that many guys are not very keen to learn about, let's say blockchain, or very keen to do a session on AML or pure digital banking. There are different people, right? So we are doing a core courses now, executive program in fintech and open banking, and we will do a specialization on on digital banking separately, because that's an area of choice and focus. Similarly, we'll do a very specialized course also on blockchain AML. I think the idea is that we'll specialize going forward so that the participants get to work deeper if they want to, but they are not loaded with a complicated program. So I think this is based on feedback, and this of course has benefit that it's one live. We don't do most of the courses actually live, and you get to, for example, when you hear about Neobanking, you will hear from Vinay, who runs, or at least this time you had Vinay, who runs Neo, and that helps, right? When we have a credit card session, we will have somebody who actually runs a credit card platform or building it up, which is from Hyperface. We will have Ashwarya joining. So idea is that we'll have the practitioner here rather than a random case study saying study about that. And our capstone projects are the most deepest courses sessions we do reviews. So I think our participants have done well. Many of our participants have gone on to join other fintechs or banks and all. And many fintechs actually hire only from that side. And of course, many of them have become founders as well. So I think that's the pointer. And any one of you is interested, you can reach out to Shrikant, or maybe you can fill that form as well, which was given. At this point of time, pause again and take more questions, and then we proceed. Yeah. This is Sushant is asking. Okay, so he's leaving now. That's okay. I think we have already shared the YouTube link. You can subscribe us there. All the content, whatever sessions we do, will be available there as well, right? Yeah, and this I think the question which was there is that I think somebody has one-on-one asked me how much is the price. I think that you can talk to Shrikant. I'm not getting into any price. Of course, me and Shashank are typically the trainers. We typically take around 40 to 50% of the course, but the rest 50% of the course is always taken by the guys which are from ecosystem. So for every segment, we'll get an expert of choice. At this point of time, we are already at 5:57. I will be very happy to take any questions you have, anything which you want to know about, anything which you personally have a challenge. And you can open your video. So I'm not looking at and just paste the chat. You can open your video and ask your question as well. And just introduce yourself and ask your question, whichever way you are comfortable with. In fact, in terms of next level of session, I think Maitri, we are coming. What is the next session we are coming with? You can just send on the chat, please. So I think if I'm not wrong, we are doing a session on ONDC and the implications on fintech, right? ONDC is a critical area of where the way UPI is there for on 20th, we are doing a session on ONDC and how it impacts the fintech ecosystem. Will be very happy if you guys could join. Again, this is part of our training as well, and we are trying to sort of fix it. So I pause now. If there are no questions, then we'll close now. Otherwise, I'm happy to take any questions, anything which you have. If no, we stop now. Thank you guys.